Well, good day, Internet. This is Brandon with Crypto Trades and Tech with a weekly update here. We've got a lot to discuss this week. Price action's been a little bit boring, but seems to me like we're queuing up for a potential move. Talk about what I'm looking for there. We got some news, Bitcoin Volcano bonds out of El Salvador, Terra, AZERO, Elrond, all in the news this week. So let's get to it. But before we get started, anything that you hear is just my opinion. I'm not a licensed financial advisor. If you were to take trades based on anything you hear me talk about today, you're going to end up losing all of your money and living in a van by the river. So trade safe. First thing is, what I wanted to show here is the relentless decline of coins coming off of exchange. You can see there's been a very large drawdown of coins off of exchanges. And you can kind of see this very stark decline in coins coming off of exchange right before the big run up in 2020 got started. So we're going to keep a close eye on this. But supply is getting extremely tight. So the liquid supply is very tight on exchanges right now. So if there were to be a large demand catalyst, it would cause quite the stir, I would believe. Now, going back to my roots of being more of a long-term trend trader, I was doing some work around looking at the moving averages that the Pi cycle cross uses, and I noticed something interesting. When the 350-day times 2, so you take 350-day moving average and you multiply that price by 2, you get the slower of the moving averages that the Pi cycle cross uses. And of course, the Pi cycle very accurately got the April top here. So looking at that, on the other side, I noticed whenever that 350-day moving average started to curl over, whatever the top tick price was, the very bottom of the bear market capitulation, and I would argue that the bear market really starts when that 350-day moving average rolls over. That's kind of the bear market indicator to me. And then once it bottoms out and starts back the other direction, we're back in the bull market. So we are in a bit of a bear market, in my opinion. Different bear market than prior bear markets, though, because the bull market was so different. But nonetheless, from the very top tick of that price, it was between 60 and 90 days before we got that capitulation bottom low price, and then a little bit of sideways price action after that capitulation, and then we resume our way up. We are in that range right now where the Pi cycle actually topped on January 20th. So we are 2 days away from 60 days out from that point as of right now. And then, you look back at 2015, the bottom was actually closer to 90 days out. So maybe something just to keep an eye on here. This is just, if you think about how the market moves in terms of momentum, when you lose momentum like this, there's generally a pretty stark decline, and then you kind of find a bottom. So we are currently in that bottoming process right now, but we'll see if there's like a big capitulation event like there was in 2015 and 2018. I don't think the capitulation event is going to be nearly as large because there's not an equivalent blow-off top this market cycle. There's already been a large amount of shakeout and a large amount of losses that have been realized through the spring peak and the summer sell-off, and then this smaller move by percentage gain from the summer to the November peak. I don't think there's a lot of fuel left for the downside. My expectation is that we're going into what I call the long tail, or a period of longer consolidation before we move back up again. But as I showed in this other chart here, the supply is getting very, very tight. So the conditions are definitely ripe for a move. So either we break out of this consolidation area that we've been in, this range-bound area we've been in, and make a move back to the top of this broader range, or we stay range-bound in this lower area for just a little bit longer. One of the projects I've been accumulating here, AZERO, we get listed on Gate.io, and ahead of that listing, the price spiked all the way to $1.40. Our initial entry, was pretty vocal about buying on this dip here late February. We bought at 90 cents. So I've been waiting for the next major dip to buy again, try to snag another purchase closer to $1. But yeah, traditionally when you have these new listings, you have a little bit of a spike coming into it, and then it's a slow decline out of that spike. Good opportunity to try to purchase the post-hype. Again, not financial advice. This is just what I'm personally doing. Okay, another news. Terra's co-founder wants to put $10 billion of Bitcoin in reserves for UST, or interesting news. That's more bullish potential activity. However, keep in mind, this is within the crypto ecosphere. So whenever these stable coins buy up Bitcoin within the crypto ecosphere, that has in my opinion, it has an effect, but it has a limited effect. Really, the biggest effect comes whenever you get a large amount of external buying. So external actors putting capital into crypto, into buying Bitcoin with fiat or other assets. I posted this chart here the other day. People didn't quite get it, but yeah, 2021 looked very different than 2017. You can see here in the bottom, the orange versus the blue. And a lot of people were saying I was calling for $10,000 Bitcoin. I was saying that, 2018, from what I did is I measured from the opening price of the year 2017 through the top price. And I started at the opening price of 2018 through the bottom price. And what I was showing is how drastically different the price action of 2021 was from the price action of 2017. And for those looking for an equivalent move in 2022 like 2018, I think they're quite missing the mark, and they're pretty far off in their analysis in doing so. The other piece of bullish news is a Blockstream CSO came out and said that late last month, $500 million was committed toward these El Salvador Bitcoin bonds, which are launching next week. So half of the bond will be used to buy Bitcoin. The other half is to power the Bitcoin city. Now, while the El Salvador bonds may not be attractive investments for you and I, or they might be, what this does is potentially unlock a supermassive market. The bond market, the global bond market, is absolutely massive. So in the emerging market sector here, if there was to be an interest in especially Bitcoin-related emerging markets bonds, that is a massive amount of capital opportunity. Now, of course, not all of this is going to rotate into that, but just capturing a piece of this very, very massive pie would be extremely bullish. So we'll keep an eye and watch how that develops. Again, here, I'm going back to my roots when it comes to trading. So let's talk about what I see for setups for some trades. And namely, let's start with Bitcoin here. You can see I've got these weekly levels. The weekly levels between 42.4 and 43,000 are going to be some resistance overhead for us here. And then we've been forming support around 37,700. I will be happy to buy a capitulation event down to this bottom trend line, and this is the 2-year moving average. So I'm going to keep an eye on that. Be happy to try to buy a dip into there and see where price action takes us should we dip down there. Otherwise, at this point, given the kind of erratic nature of how the moving averages are playing out, you can see here we had a very uniform increase in moving averages, and then when price rolled over, we had a pretty uniform decrease in moving averages, where the 50 was declining, the 120 was declining, and the 200 was flatlining. And so on the capitulation move here, that was a good place to take a potential bounce trade. That trade ended up carrying us much further all the way through this new all-time high because of the futures ETF approval that drove that price. But now we've had these moving averages move up and then back down again. And so we have kind of a situation where we've had just so much excess volatility, we'll call it, that it's my opinion that we do need a period of kind of cooling off before the next major move. So what I'm really looking for is I'm looking for price to kind of remain constricted to maybe this range that we're in now. What I'll be watching for is to see if we can hold the 50-day moving average and watch and see if these moving averages all want to compress. Let me go back in time. See here, after periods of volatility like this, the moving averages tend to like to compress a little bit as price consolidates right above them. And then this sort of price action is what I'm looking for to look for trades, where the price is mostly staying above the longer moving averages and it's crossing across the 50-day moving average. When it takes out some structure and takes out that 50-day moving average after a period of consolidation and compression, generally speaking, is probably some good places to look to lean in and take some trades and or add to your position. And you see there I've circled a couple of key places right as price is breaking these longer term trend lines after having held above the longer moving averages. The moving averages are now all trending back up in the right direction. Those are really attractive places for me to lean into. So for here, what I'm seeing is I see these moving averages starting to want to compress down here. And so what I'm waiting to see if we don't get some more compression of these moving averages right around the $42,000 to $44,000 range. And then we'll see where price takes us from there. But at this point, given the up and down nature of the market, unless I'm buying a capitulation move into this bottom trend line or that longer term moving average, the 2-year moving average, I don't want to be playing this range too actively myself. So in lieu of trading ranges while the momentum sorts itself out here, and I can confirm that we're going to resume the uptrend. I've been yield farming is what I've mostly been doing. So instead of trying to trade these ranges myself personally, and a lot of people are very good at trading ranges here, but for me, my answer is to look to other ways to grow my capital while this sorts itself out, while this price action consolidates. Again, the fundamentals are set up for a potential big move. So if we were to break out in a big way, I would be happy to buy back into that support that I highlighted earlier. Last point here is it looks like we could be putting in another accumulation pattern, of course. And so we are kind of in the midpoint of potential consolidation. So you can see here, what we had in November was a kind of a modified Wyckoff distribution pattern 2. So I'm looking for the potential of us to go into a Wyckoff accumulation pattern 2, because I think a lot of people are going to be looking for that spring that we had in summer. That's what the market is maybe conditioned to now expect, is that big capitulation move down below that spring and then that price action out. But that doesn't have to be the case. These patterns play out in all kinds of ways. But this whole bottoming pattern could simply be just price constriction. And what's interesting is, you marry this expectation of this Wyckoff pattern 2 as a potential with the inevitability that we've had this very large increase in volatility as seen by how the moving averages are being tossed every which direction. And you can see that if we were to be constricted to this range for a period of time, how those moving averages would flatten out. It would give us the launch pad, we'll call it, necessary for the next big move up or down. Now, given the fundamentals and given the fairly bullish news, I would expect a move upward. Of course, we have macroeconomic and geopolitical risks that could take it down temporarily for a short capitulation move as well, give us that kind of spring action. But I'm starting to doubt. We've had so many negative geopolitical events. The odds of the news getting drastically worse and causing yet another market sell-off is pretty low. We have a lot of risk events off the table with the Fed raising rates by 0.25 to a target of 0.25 to 0.5 percentage points. The last thing I want to talk about is I have been adding to my Ethereum position. So you can see the Ethereum Bitcoin chart looks to me like it's wanting to put in a short-term bottom here and maybe break back to the upside of this. You can see the trend lines that we have here. Let's remove the moving averages. You can see this little break of this structure here back, and it's into just above this weekly resistance right now. So I've added on this bottoming down here. I did add a little bit, and I'm going to be adding here, assuming we can hold this breakout area and hold this upper trend line. I'll be adding back a little bit more. So I'm starting to rebuild my Ethereum position very carefully though, because I am wary of the high potential for a larger breakdown. So should we get a capitulation move in Bitcoin, take us back to say the low 30s, then the altcoins are probably going to see a fairly catastrophic sell-off. And I believe Ethereum would be one of those that would take a pretty big haircut. Now, the big reason for me adding to my Ethereum position here is the news around the proof of stake merge that is going to be happening with Ethereum this summer. We'll talk more about that. I'm going to have Alan back on. Alan and I are going to do a video next week where we're going to talk about what that means for the market. And so we'll talk much more about that then. There's a little bit of a preview here. I'm starting to see signs that Ethereum wants to bottom, at least for a period of time, and maybe test the top of this range, the top of this trend line, perhaps this channel that it's been in. Well, thanks everybody so much for the support. Please like and subscribe if you made it this far. Consider sharing this video with a friend. Take care.